All right, perfect. What's going on, guys? So what I want to do in this video is I want to show you how to get sharper with your entries, but also taking the signals that we send out in the community, right? So that's super important across the board to be able to identify. Example here, buy XAUUSD by market, 452 to 448. 446 is your stop loss. What that looks like is on here, we're going to go, obviously the market is closed, but I'm going to show you some of the live examples on crypto because the market's open. So let's take back and let's go to here. So there's a few things that you can do, right? You can set an order by market. You can set an order by pending. You can sell by pending or sell by market. So usually when buy by market, I'm referring to this. Now you can come here and type in your stop loss, for example. So if the stop loss was 40.46, right? Let's say your take profit from 40.46 was, let's say 40.50, right? And obviously because of where price is, we'll have to use a different, but let's say this is where you're looking for your entry. Is going to be here. Your stop loss, let's say, is 40.34, and your take profit is here. Now, where price is currently at, and I'll put a little check mark so you guys can see, this is currently where price would be at right here, right? And right here in this area. Let me just, all right, this is where price is. So your stop loss is going to be from 40.41 to 40.34, right? Meaning that this area all right here is where you would be considered in drawdown, right? So everyone can kind of understand that. So now when you enter, obviously you can use this tool right here to calculate. If price is at 40.41 to 40.34, it's 7, right? Which stands for 70 pips or 70 points. So this is your risk factor. So 9 times out of 10, when I'm adding a stop loss to a position, that's my stop loss. 70, sometimes 50, sometimes 40, like 48 or 50, right? The most I'll ever do is maybe 100 pip stop, but even 100 pip stop, I'd rather get out, let it hit stop, and then re-enter again, right? So this is as much as you should be losing. Now, once this trade flips blue, you notice how red is drawdown because we're minus. Once we flip blue and we're about here, 20 pips. This is where I'm moving my position from essentially where it would be, let's say where it says draft -7. And let me just adjust the lot size to something that like I trade, like a 0.30. Right? So I'm risking 200 to gain 325, right? 2% risk to gain 3% gain. And I'll show you how I draw that out as well. This is 20, this is 30 pips. My stop loss from down here where I'm risking 70 pips is automatically coming right here, is what we call break even, right? And then once we're 50 pips, I'm already taking partials. Sometimes if you're just scalping and the market's scalping, you can just take partials at 30 pips, 40 pips. By 50 pips, 60 pips, your stop loss here should be moved at least 10 pips in the profit. So it's a fully risk-free trade, but you leave with something. Now, obviously on a smaller account, it may not seem like a lot, but on a bigger account, let's say when I drop a 1 lot, which is average of what I do, right? I'm risking 700 to make 1,000. If I'm up $300, which is 30 pips, there's no reason I need to leave my risk all the way down here, right? So what I'm doing is now I'll bring up my risk to about positive. So no matter what, I'll make 28 bucks. If it goes anywhere to, let's say here, I still make 70 pips is $700. So you have to remember that once you change your lot size, the lot size is what's gonna make and break your life. Like that's gonna change your life to another level, right? So that's just something you guys have to start to understand. Break even is not because we want you to go to break even. Break even is to protect your capital, right? And on the standard, look, the reason why I said I'd rather take 50 pips loss, because look, that's 500, right? And if rather than having 100 pip stop, I'm losing $1,000 just to make 700, that's not, I don't like those risk to reward ratios. So I'll stay around 500, 600 bucks. Let's say the market drops, right? And this happens, right? I rarely get hit by a stop, but let's say it's a moving market or it moves really quicker. And let's say I only have maybe one entry, but I'm minus 44. What I'll do is, and this is why I always say, you know, after break even, just sometimes wait. I'll wait till the market maybe comes lower, and then I'll just give myself the same conditional rule of right here of about, oops, hold on. Oh, let me just go flat. There we go. So it's going to be weird because it's showing a draft. It's taking it from here. That's why it's saying I'm risking 800, but that's not the case. But let's say, okay, let's just say I'm up here and the market's moving. I'll re-enter, have a tighter stop as the market pulls, and then once I'm out of, let's say that first position is back into break even, I'm going to go ahead and close it out. So this is important for two reasons. One, it always keeps your risk limited, but two, you're playing at a target where you can make 150, 250, 350 a day, right? That's the goal of trading. The thing is about being able to make enough money to build your capital. So yes, on a 0.05, it may not make sense on, you know, why you're only making $50 and risking 20, but when you change that lot size, you're risking 200 to make 500. I mean, that becomes a very big difference. You know what I'm saying? So look, if I go up to 0.50, I'm risking 200 to make 500. If I go to a one lot, look, I'm risking 400 to make 1,000. Same thing, two lot, risking 800 to make 2,000. That's life-changing money, but you have to realize it's the same move. It's not like anything's different. You just are changing that lot size and that reference. So now let me show you also another tool you can use, right, which is the long position. So sometimes when you're starting to trade or you're new, you want to figure out, okay, hey, how do I enter? Or like where, like when you say buy, like what is our zone? You know, and I'll send that out in the chat. So here's an example. If this is my long tool, and let's say the signal, I say, well, if I say buy gold now, that means you need to want to go over to your chart, and you're going to obviously look at buy gold, which is equivalent to a long position. And then let's say I'm going to always try to give you the range unless the market's really moving or stagnant. So let's say 442, right, to 440. Then it will say stop loss 437, right? This is the signal that has been sent out. So now when the market is where it is, or it may be approaching, you can come here. So left hand side, look, 1, 2, 3, 4, 5 positions below. Click here under projection, click long position. And now you can place where I put 4042 to 4040, which are these numbers on the right side of the screen. And we'll just put it at, let's say 4041. Now I give you the stop loss for a reason, right? Because if price goes below, you want to protect your capital. So the stop loss on this example is only 40 pips, right? And then our target, there's really sometimes no time to write out the targets, but I always say anything 40 pips and above is a great target, because on the right lot size, that's a quick $400 trade. No drawdown, sometimes straight to that TP1, that's 400, TP2 800, TP3 1200, right? Anything after 100 pips is not even a scalp anymore, it's considered intraday. So this is just a little bit. So now if this is where my entry is, if I put the stop loss right here, look, I'm risking in this specific example, well, actually, because of where the market is, I have to go up. So if I enter there, my risk is 500. Now, if my target is 80 pips, I'm risking a 4 or 500 to make 800. So once the market starts moving in the direction I want, this needs to go from a $500 risk to risk free. And then you would hit confirm, right? So that is how you want to take a trade and be accurate when these trades are being sent out. We're going to send you the signal, right? You just need to follow the direction. Now, there's no reason if the market falls, hit stop loss, okay, hit stop loss. We'll worry about the next trade, right? Now, there's no reason the market should fall all the way here and you're down $1,200, for example, when the stop loss was given. So instead of you taking a 40 pip, 50 pip, 60 pip, you're now taking 120 pip stop loss to the face. And that's what we want to avoid, because if you're already not using the right proper leverage, that's going to hurt you. Remember, your risk is always going to be less than your reward, right? So if you're risking $100, your goal is to make 200, 300. You don't want to be risking 300 to make 100. That's backwards, right? So that's just some of the things I need you guys, as you're learning, and those of you who are new and starting to get the hang of it, is always remember your stop loss is what's going to preserve your capital. Trading is about how much you can win by preserving your capital with taking the least amount of risk. And this would be the same for a sell, but like I said, I don't really look for sells because we're in an overall bullish market. Now, sometimes you'll see a trade come out that will say intraday. So intraday means similarly the same thing, except intraday, your stop loss is probably going to have to be about 80 pips, 80 to 100 pips. Because, look, stop 8.2, which is 80 pips, because your TP is probably going to be about 160 pips, right? From usually a swing low to a swing high, or from a high to a low during the displacement of the candle. So this is no longer now a scalp. This is now intraday. So yes, you're going to risk a little bit more, but you can always lower your risk, but the reward is going to be greater, right? And a lot of times when price hits a certain key level, which you'll see in some of the other videos, you're automatically watching the market move to that standpoint. So even if you're risking 800 to make 1600, that's still a 1 to 2 risk reward. Now, granted, once that now goes 1 to 3 risk reward, remember, once this trades in profit and you're at break even if you use a larger position, right? Let's say, for example, I'm here. Normally, I'll risk a standard, but let's say I want to go a quick 2 lot because, hey, I like what I see. This is 1600 at risk to make 3000, though, 3200. Now, the moment this trade is maybe 20 pips in profit, which would be about 80 plus bucks or so. No, a little bit more, right? That's like 200 or whatever, whatever conversion is. I'm slowly starting to bring my stop loss up. So now I go from negative 1600 in risk to negative 1000. Then at about 30 pips, I'm at break even or just about low. Like I risk like 300, right? Just below my entry. So that I'm risking now 300 because the market's already moving with the potential to make 3,000. Now, let's say the market goes up and it starts to fall. You should be already taking partials, right? Because maybe the market wants to give you another re-entry. Every time you trade and you're in profit, there's no reason that should ever turn into a losing trade. All right, so I hope that gives you kind of a detailed explanation, a little bit better, but especially for those of you who are new. Now let me show it to you on a level of something that's open. So let's look at BTC USD. All right, so this is Bitcoin. Let's say right now it's in the uptrend, right? Everyone, the trend is your friend. Cool. Even though it looks like it's reversing, but we're not going to get into that type of training right now. I just want to show you. So live so you can kind of see what this looks like. So obviously this is a demo account, so I'm going to use a way bigger position just so you can have a visual perspective. Let's start with a 10 lot. Okay, so let's say our hypothetical right? Signal comes in, it says buy BTC now, or BTC by market, right? Let me just move this out the way. The entry says 63042 to, let's say 63040, which is literally nothing. Stop loss is 6,300. 63,000, sorry. That's a trade. I can literally come here and line it up. So this is where the market is looking to enter. I now see that my stop loss is here, about 40. And then let's say my target is here. That's a 1 to 2. I can now come here and now place my stop loss and drag it down. And then I can move my TP. Damn, look, that trade's already taken off. I hit buy. Obviously, the margin spread on crypto. But yeah, it puts you in, and this is a demo account, so this is why it's going to put you in. But let's say, does it all put me there? Oh, yeah, okay. Oh, shit. I have my stop loss, though. That's what matters. So whatever happens with this trade, my stop loss is in effect. I can now go about my day if I wanted to. Now, let's say once this trade, I don't want to risk 600 anymore. It starts to push up. I bring my stop loss up. I hit confirm. Instead of risking 600, I'm risking now 400. Right? And my TP is still the same. Right? Now, if I also come to trades, it will show me each one. Once they're in profit, I'll hit this break even button. And break even means that the trade's in break even. So I won't win, but I won't lose either. I can also hit edit. It'll take me directly to the trade where I can say, move stop loss. Okay, stop loss is coming. Let me move the stop loss on the other one, right? And it gives me some options, right? Also, I can now adjust the TP. Let's say on that position, I want a closer TP, just because, and I'm going to put a stop loss right here. Yep. And then, I don't have enough available margin on this small account to be dropping 10 lots on Bitcoin, right? So that's another thing. It won't let me place a trade. That's another thing. Look, I'm over leveraged, right? So I'm over leveraged, even though I'm only down 500, but there's not enough margin, right? So look, margin used. I'm using all my margin. I only have $39 left available, right? So obviously crypto's volatile. So if I can't perform the trade will margin me out. And it will not allow me to buy any more entries. Now, let's say, for example, all right, I see the trades like lower, and I'm like, all right, well, it's probably going to refill. I can just come here real quick, and look, I can just close out all my trades. Boom. I'm down 500, right, on that. But now, because I could get a better entry, boom. Now I got a better entry. And I got my TPs running. And my stop loss hasn't moved. It's still at the same level. Because your stop loss is like if price came down from, let's say, oops. Let's say your stop loss came down like that. If it hit right here, fine. But if I have a stop loss, what if the market wants to come down and then start to make its way up? I would have risked all this extra money for no reason. When I could just let it hit the stop loss, wait to see what the market's going to do, and then get a better entry. All right, and look, I added entries, and I can just click on each one and just adjust my stop loss. So now I got all my stop losses running. It's gonna be this one. Stop loss. Boom. So now my $10,000 account is protected. Let's say I'm in profit and I want to take a partial. I would hit that button right there. Look, next to break even, hit partial close. That's what taking a partial is. And I can type in how much I want to, like, if I'm running a 10 line, I want to take off 5, I'd hit close, and it would close half of that position, right? And then, like I said, like, okay, I see the market coming down, boom. Obviously, the market's not moving at all, but in the case it was, you would see it moving, and then we would have a better idea. So remember, come here, long position, line up what you need, move your stop loss once in profit, 20, 30 pips. Make sure your risk to rewards 1 to 2, 1 to 3. On intraday, you can go longer, so 1 to 3, but your risk is going to be about 100 pips to 120 pips. You don't need a 80. You don't need. Sorry, well, this is crypto, but you don't need a 200 pip stop loss. If 200 pips is a trade for us, right? So keep it tight. You know, it hits it, cool. If we have to wait to re-enter, sometimes you have to do it like that, right? Let's say it hits it there, and then, you know, you're out, but it pushes lower, and then your next setup's here with the same stop loss, same lot size, but it goes all the way up here. Guess what? This trade, right, took off. Right, agreed? This trade took off. And this one didn't. But guess what? Your risk was still the same. And once this trade goes to TP1, which is right here, this loss no longer exists. And now everything above is profit. So that's how I want you guys to keep that in mind. Use it as a valuable way. And then remember, always try to make sure you're getting the entries closest to what's being sent out. So I hope this video was helpful. I got a few more different videos I'm going to record for you guys. Want to make sure you guys get sharper, better, and just keep performing. Let's run it, man. I'll see you on the next one.